We finished up with cost allocation last week, and that was just the beginning of cost allocation. We're now going to have some specific examples of cost allocation. Today will be the allocation of costs from support departments to producing departments. And then we'll also talk about common costs and revenues at the end of the session. There are three ways. This is a methodologies kind of chapter where there's lots of math, for those of you who like math. So there are three methods that we'll go through for allocating support department costs: the direct method, the step-down method, and the reciprocal method. And we'll talk about a couple of different ways of allocating common costs, standalone or incremental. And we'll finish up with some issues. How many of you have worked in a relatively large company, mid-sized to large company, in a support department? Anybody? Well, it's an incredibly complex process in companies, large companies or mid-sized companies, to allocate the cost of these support departments. And by support departments, think about HR, IT, finance. So these are costs that are, general departments that are performing services for the revenue-producing departments. And the revenue departments need to pay for the services they get. And as you can imagine, they'd rather pay less. And all the costs have to come out of these departments. And without fail, the revenue departments think that the support departments cost too much. And they have battles. And they have disagreements about how much they should get. So this is a real fundamental problem in every company. The key to allocating, in any case, but from a support department to an end producing department, is that the end producing department must feel that there's some kind of a cause and effect relationship with how much they're paying and how much they're getting in service. If the relationship is not clear to them, then the managers of the revenue producing department lose their incentive for trying to do the right thing. And they'll say, why even bother? We're just going to get the cost anyway. We talked about two overhead approaches when you're allocating from within a department: volume-based, number of products sold; activity-based, the specific activities performed with a driver. So you calculate the allocation based upon that driver. This is different. Departmental allocation happens after the fact, or possibly before the fact from budget, and it's done a little bit differently than the other two. As I said, support services are those departments that are providing a service. In most companies, they're centralized in some way, so they can get some economies of scale. If each end producing department had their own IT function, it would both be dangerous for the company because it wouldn't be well controlled, and it would be costly for the company as there would be duplication of quite a few activities that ought to be centralized. Same thing is true for HR and IT. So the challenge is every department, whether it's a service department or an end department, accumulates costs. Those costs ultimately all, whether it's from a production department or a service department, need to get into the production department's overall cost, and then from that production department overall cost, get to each individual product that is produced. So you have the fully absorbed cost of the product. There are two ways to look at this. There's the single rate method that, bless you, that allocates from the service departments into the cost objects based upon a single number, a single rate, and it kind of blends fixed and variable costs into a single rate and doesn't try to be too fine in its analysis. This is simple, but it's somewhat less refined than having a multiple rate method. Generally speaking, though, this is the way it's done. So it treats fixed costs with the variable costs as the whole thing as a variable cost. And because you're usually working within a relevant range, it doesn't have too much of an impact, so it's immaterial. The other alternative is a dual rate, having separate drivers for fixed costs and variable costs, and that gives you a more realistic number, but it's more complex. We're going to focus on single rate method in this class. You could allocate based upon budgets or actual results. Obviously, the budget result is known at the beginning of the period, so the receiving department knows what they're going to get. That's an advantage for them. Another advantage for the receiving department is if you use actuals and the service department that's doing the allocation was inefficient, you don't have any control over the fact that you're just going to be hit with a much larger charge than you expected because of something else happening. Or for that matter, let's say there is a service department that supports 3 different business lines, and one of those business lines goes out of business. If you used actuals, you'd get a much bigger chunk because it would only go to 2 rather than 3. So budgeted data is often the better way to go in terms of allocating these costs. Here's the challenge that these 3 methods that we're going to go through today are trying to solve. Service departments also service other service departments. HR services IT. IT services HR. And so how do you do the allocations from service department to service department so that, and then eventually get them all to the production department? And that's the mathematical challenge that we'll go through, from the simplest method, direct method, to the most complicated, the reciprocal method. Let's go through the direct method. Very simply put, you ignore the fact that they allocate to each other. You just take the costs and you get them to the end users. So IT and accounting have services they provide to each other, which of course they do. You ignore it. Okay, so we'll use this Canton division of Smith Corporation, and they have 2 support departments and 2 end departments. We'll have maintenance and HR be the support departments, and assembly and finishing being the operating departments. There's a total of 255,000 square feet, and maintenance is allocate based upon square feet, so that's the driver, the square feet. And HR is allocated based upon the number of employees. There are a total of 95 employees in total. Maintenance has been budgeted $300,000, and HR, much bigger nut, $2.16 million. And you can see the number of square feet they're using. Remember, there was 95,000 square feet. They're just using a part of it. The operating divisions are using the remainder. And the number of employees in these 2 departments, 8 and 15. So the allocation, well, here's the other 2 departments, the finishing departments, assembly and finishing, their direct costs, and the number of square feet they each use, and the number of employees they each have. Remember, we're going to ignore this. So here's how you would do the allocation. There's 0% allocated between the two. Each of the two operating departments had 110,000 square feet for a total of 220,000 square feet. So they each get half of the maintenance, right? They each get 1/2 of the maintenance because they shared, they each have the same number of square feet. HR, which is driven by headcount, assembly has 48 people and finishing has 24. So assembly will get 2/3 of the HR costs and finishing will get 1/3 of the HR costs. And those costs are $2.16 million. Here it is in dollars rather than percentages. This plus this will equal this. And so you can now see the total costs going into assembly would be the cost coming from HR, the cost coming from maintenance, and the costs that they incurred internally. And here you can see the total costs for assembly and finishing. The challenge for this method is if you're dividing up the costs by percentages, you don't have 100% going to assembly and finishing because there's some going to the other service departments. You need to step the percentages up so that the 100% are going to assembly and finishing in order to do this calculation. And you'll see that in an example. In this example. So you have 2 service departments and 2 production departments. Service Department 1 allocates its time 30% to the other service department, and then 35-35. And Service Department 2 allocates its time 20% to Service Department 1, and then 20 and 60. Now, in the direct method, we're ignoring this. These 2 percentages don't add up to 100%, right? We have to step it up to 100%. So instead of using 35 and 35, you'd use 50% and 50%. You have to make sure that everything gets allocated out. At the end of the day, the service departments can't have any costs left in them. So this would be 50 and 50. And what does this become? Just trying to get you guys engaged a little bit because I think your mind is everywhere but. How do you step up 20% and 60% to 100%? Well, what's 20 plus 60? Let's start with the easy one. Okay, 20 plus 60 is 80. So 20 is to 80 is equal to x is to 100. What's x? Cross multiply. 2,000 is equal to 80x. We're getting close? X is equal to 25. So 25% would go to Production Department 1, and that leaves 75% going to Production Department 2. So in the direct method, you need to step it up. So you'd say that Production Department 1 would be getting half of this 30,000 or 15,000 based upon 50-50, and they'd be getting 25% of this 20,000 or 5,000, and the Production Department 2 would get the rest. That's the direct method. the step-down method. In this case, you don't ignore the fact that service departments support other service departments. You simply choose one and you focus on it allocating to the other rather than allocating back and forth. You just step it, and you'll go from the larger allocation. You go from the department that is used to a greater extent by the other department. So, visually, that says that IT and supports accounting and accounting supports IT. But since accounting gets more of IT than IT gets of accounting, we're only going to look at this step. We're not going to look at that. Keep it simple. Okay, so maintenance provides 12% to HR, and HR provides 10% to maintenance. Which one is going to be the one that we're going to count? Somebody, anybody, come on. Let's play. What's that? We're going to the larger one. Thank you. So going back to the original numbers, from this case, we're going to be going from, I believe, maintenance to HR, so we have to factor in those costs. So, maintenance will be allocating 44% to assembly. That's the total of 250. And they had 110. They do the same for finishing. And then they have their 12%. That 12% goes to HR. Right? Now we have to get the stuff out of HR. So HR's costs are now their original costs plus this $36,000 they got from maintenance. And those sets of costs need to be allocated to the end department. So HR, you see maintenance has closed its books, right? It got rid of all of its costs, sending some to HR and then the rest to assembly and finishing. So HR is now $2,196,000 that has to be allocated out. And it's only going to the end products here and here. And that was, I believe, 2/3, 1/3 that we had. So it will go 2/3 to assembly because they have 2/3 of the headcount of the production departments, and 1/3 to finishing. The net result is that HR is now clean, and assembly and finishing have absorbed all of the costs. You end up with the production departments absorbing all the costs every time. So they've absorbed all the costs, but in a different solution than we had with the direct method. The numbers change. Sometimes it's material, sometimes it's not. And here's how it would shake out here. Okay, this example, and you guys are going to get to do some work. I need to shake you up a little bit. But I'll get you going. Which service department will be the one that will allocate to the other service department? in the step-down method. Thank you, S1. Yes, because S2 uses 30% of its services, whereas it only uses 20% of S2's services. Okay, so work within your teams and go at it for a little bit. See if we can get it done. I know how much you're looking forward to this. And the same to... Now that adds up to 30,000. So all of the costs from Service Department 1 are out. So Service Department 1 is clear now. Okay? So now we have to, so that's the 30,000 that you've gotten rid of. Now how much do we have in Service Department 2 now? 29,000. Its original 20,000 plus the 9,000 that it got from Service Department 1. And how will it allocate its costs? So what does that come out to? You have to, in this case, you have to get this up to 100%, right? So 25% and 75%. So what's a quarter of 29,000? Yep. And what's 3/4 of 29,000? And you get the total allocation. So that would be your answer. How many teams got that? Oh, yeah. Good. Okay, so those were the two easy methods. We're back to kind of algebra now. The reciprocal method fully acknowledges the cross allocation. The challenge to fully acknowledge that cross allocation is you have more than one variable in an equation, so you have to do, if you remember this, kind of substitution method from algebra. We'll see it together. It'll be fun. So we fully acknowledge the cross allocation here. That's the thing. And the reciprocal method gets exponentially more difficult the more support departments you have. It's hardly worth even thinking about doing it any other way but with a computer, with any more than 2. It gets to matrix algebra. Any of you ever take matrix algebra, study matrix algebra? Good. It's matrix algebra at that point. But you don't need to know matrix algebra in this class. So this is the full allocation percentages. Remember, this was 50-50. This was 2/3, 1/3 when we did it the direct method way. So now you have to create simultaneous equations. Are these terms that are coming back to you at all? First, you create an equation. What's the total maintenance cost? It's the $300,000, which was its own cost, plus it gets 10% of the HR cost. So that's one of your equations. Maintenance is equal to $300,000 plus 10% of HR. Your second equation is HR is its own cost, 2.16 million, plus 12% of maintenance. Anybody remember how to solve simultaneous equations? Let's do it. Yeah, these were given. These were given like we used the same numbers for the direct and the step-down method. Those were the actual costs incurred within the support. So M is equal to 300,000 plus 0.1 H. I'll just call it H. H is equal to 2,160,000 plus 0.12 M. So to solve this, it's very tough to solve a problem with two variables, but we know that this whole thing is equal to H. So you have M is equal to 300,000 plus 0.1 times 2,160,000 plus 0.12 M. Now this is solvable because you have one variable. And you can solve the problem. I won't go through that math. So you create simultaneous equations and you solve. The net result is you get a new value for the maintenance costs and a new value for the HR costs. Notice that they're both larger than the initial values, right? But this is just a kind of a step towards the final solution because they have each other's allocation in there. Remember that maintenance started at 300,000 and HR started at 2.16 million. Now we get to allocate these out. When you allocate that out, you do it at the original rates. So this would be 0.44 and 0.44, not stepped up to 0.5 and 0.5. And this would be what was it? 0.6 and 0.3 and 0.1. So the net effect is the math here. It gives you a much more refined answer, a much more truthful answer, but is it materially different enough that it's worth the effort, is the question. And sometimes it will be, and sometimes it won't. You guys want to do this, or you want to practice this? Your call. Who says yes? Who says no, but they accept the fact it's going to be on the next test? Okay, as long as you acknowledge that as a possibility. Do it on your own, if nothing else, at some point. We've only, up till now, been allocating into the production departments. That's not the end, right? Departments are rarely the end game for costs. They then have to be allocated out to products. And so we're not going to go through it here, but just know that you would allocate it out to products the same way you'd allocate your departmental costs any other time. Maybe driving it by direct labor hours, for instance. Okay? So some of the key implementation challenges when doing this is one, you must have a reasonable cause and effect allocation, otherwise managers will lose their incentives for doing the right thing. Generally speaking, it's better to use budgeted costs from the service departments rather than actual costs. It's more predictable, it's more timely because it happens before the fact, and it's more motivating because the receiving departments know what they're going to be getting. Now, the challenge is if they use more than they expected because they had special needs, if you use budgeted, they get that for free. So that's the other side of the coin there. Another challenge is once you look at your allocations, this happens all the time for the IT function, the receiving departments think, oh my God, it's so expensive to use the internal IT. We should go outside and find an IT resource that's cheaper. So the question is, do you allow that to happen? Does an organization allow the production departments to treat the service departments as one of many potential vendors of a service and then go outside so they get the best quality at the lowest cost? So reciprocal is the most precise. Direct and stepwise are easier. And the reality is direct is used a lot because it's the easiest. But that's the challenge. It gives carte blanche. You know what carte blanche means? You don't have to pay. They get free use of each other's resource if you use the direct method. Okay. So the second half of this chapter talks about common costs and common revenues. And this goes back to our little game last week where we had the taxi situation. What's the fairest way to allocate a shared or a common cost? There'll be two methods we talk about. The first is a standalone method. The standalone method allocates based upon the percentage of use. I think most of you, when we looked at the taxi situation, said they were going this number of miles, they were going this number of miles, they were going this number of miles. Let's create some kind of a percentage cost for everybody. And you had different allocations, but that was the general idea that most of you did. The second method is the incremental method. It says one of the users of this shared resource is the reason we're doing it. They should pay in full until their total costs are used up. Then you go to the second reason you were doing it, and then the third, and you just kind of allocate as much out based upon the prioritization of the end users. Some of you said that Wen was the boss, she should pay for it all. So that would be that example. You don't need to know this. Let's look at an example with a standalone. A consultant is in Tampa, and he's planning to go to Chicago to meet with a client. The cost of airfare, round trip, Tampa, Chicago, Tampa, is $540. Because the consultant is on the road, on the way back, they want to stop in Durham, North Carolina to see a second client. So obviously it'll be Tampa, Chicago, North Carolina, Tampa. There should be a cost savings associated with that. So Tampa, North Carolina was $360 versus $540 for Tampa, Chicago. The entire trip, I guess they go into North Carolina first, doesn't matter, was $760. Less than the total of doing two separate trips, saving the company some money. How would you allocate it? Using the standalone method, you'd say Durham or North Carolina should pay the 40% of the total cost based upon the fact that the round trip to North Carolina was $360 and the round trip to Chicago is $540. And obviously Chicago should pay 60%. Or $456. So that's how you would allocate between the two. the standalone method. The incremental method says, we were going to Chicago. We just threw North Carolina into the trip because it wasn't going to cost nearly as much money. So you would allocate 540, the entire amount that Chicago should pay. And then North Carolina, Durham would only pay what's left over, 220. That's the incremental method. So this method works when it's clear that you have a priority department or a priority user, whatever that might be, and the others are just going there for the ride. It's not only done for cost, it's done for revenues as well. A lot of businesses bundle product, right? Hotels. I know this one. You get a room and they'll give you a discount on golf or a discount on the spa if you pay for the room. And can you think of any other businesses that would do that kind of bundling? Say it again? Go to Vegas, you go to the casino as long as you gamble, you get free drinks. Okay. Communications providers, now that's a good one because now they're essentially giving you your landline for free because nobody wants it anyway. So, yeah, they bundle $99 for all three, but essentially they're giving you things you don't really want for a steep discount. Banks do it sometimes. Hotels do it. Tour groups do it, amongst others. You have the same concept of standalone method and incremental method in these cases as well. The standalone method says you look at the sum basis and you allocate out the costs percentage-wise. It could be based on selling price, could be based on the costs, could be based upon the actual physical units that you sold, but you essentially allocate out the discount that comes with the bundling of the product. The incremental method says, you know what, we're really, the hotel is really selling the room, and the fact that you're playing golf, that'll get secondary. Cruise lines, they're actually selling all the extras and giving you discounts on your room on the ship because they just want to get you on board so they can get you for all the extras. So you would figure out, you'd go from the most important part, make them pay in full, and then go down to the other components. Okay, English Language Institute. They sell products in Mexico and Central America, English language products. They have 3 products: grammar, translation, and composition that they sell. They try to bundle them. They do sell them standalone. There'll be a lot of numbers here. Focus on the concepts. So standalone, grammar is the most important, composition second, or they charge the most for composition second, and translation third. The cost to the company to get these 3 products are essentially in the same ratio, but you can see there's a higher markup for composition than any others. They have 3 different bundling techniques, as seen here. Notice you have to buy grammar. If you're going to bundle, you start with grammar, and then you can get any combination of the other 2. And there's a bundled price. So in the standalone method, as we said, there are different ways that you could find the percentages that each product should pay. If you did it by selling price, where you had the grammar and translation bundle, grammar should pay 75% and translation should pay 25%. So that would be or they should get the revenues 75% and 25%. So that's how the revenues per bundle would break out using selling price as the guide. Using unit cost as the guide, it turns out to be 80-20 rather than 75-25 that grammar would absorb or get the revenues for. Physical units, which would be completely unfair in this case. You're selling one grammar and one of the others. So they each would get 50% of the revenue, even though grammar is much more expensive naturally. So probably does not make sense in this case to use physical units. You would use physical units when the selling price and the costs are very similar between the products being bundled. I'm going to go quickly through this. I think you get the idea. On that. What you can see is based upon the different ways that you do it, you'll have very different allocation of the revenue. So you need to choose a model that's fairest to the parties. Let's look at the incremental method. More straightforward. Obviously, grammar is the primary. Every bundle must have grammar. So it's the primary product. The others are add-ons. So grammar should be allocated 100% of the revenue, and the other products will get their share incrementally. So if you sold the grammar and translation suite for $290, you would give grammar $255, which is what it would sell standalone, and translation would just get the $35 incremental. Okay, that's that. We'll wrap it up. Cost allocation. These allocations are important. If you have a government contract, the government's going to absorb your costs, because if you do a cost-plus contract, the way you choose to allocate will create different prices that you'll charge the customer if it's cost-plus. So you need to do something that's fair and equitable. Obviously, if nobody was watching, your preference would be to use the methodology, maybe the incremental methodology that charges as much as possible to the government job and as little as possible to all your other jobs. And so you can recover more of your costs through the government if they weren't watching, but they'll be watching. And that would be illegal. So government contracts should be watched carefully to make sure that allocations are not over-allocating costs to the government work, since they know that it can be recovered through cost plus. Similarly, if you allocated in such a way as to create more costs to go over country borders, so that you have tax advantages. So since the U.S. tends to be a higher tax country, if you allocate your costs in such a way that your U.S. subsidiaries absorb more costs, that would give more expenses to the U.S., reduce the profit, and reduce your overall global tax burden. But this is watched carefully, but still companies figure out how not to pay any taxes in the U.S. That's it. Okay, guys. Let's get refreshed, and we'll see you all